In today's episode, I'm going to rank the best brokers for international traders interested in day trading the US equities market. We've got my master broker comparison sheet here that we're going to use as a reference, and I'm going to be comparing these platforms based on 4 critical components: minimum account size, execution speed, commissions, and the product experience. How good is the platform? Does it work well for trading? And is it reliable? Now, we'll look at a number of other bullet points of comparison, but those are the 4 that, in my opinion, are the most critical, because if a broker doesn't meet even just one of those 4, it's off the list. So let me begin by introducing myself. My name is Ross Cameron. I'm a full-time trader, and I funded my first account back in 2001, more than 20 years ago. So I've traded on more than a dozen different platforms and brokers over the years. And so I'm in a unique position to be able to share with you the features that I think are absolutely critical that you need to have in trading software. Because here's the deal. Trading is hard. I'm not going to sugarcoat it and tell you it's easy. It is difficult. But why make it harder on yourself than it has to be by using low quality software or a broker that has poor execution speed or is just slow? It doesn't make sense. It's not worth it. Now, I also want to say at the beginning of this episode that I have no affiliate relationship with any broker dealer. So I'm not getting paid to recommend one broker or the other. It's just my honest opinion of what I think is best for my day trading strategy. My strategy may be different from yours, so you also have to take that with a grain of salt. Okay, so let's go ahead and jump in. This is my broker comparison sheet here of different platforms that I've done demos of. However, a number of these brokers do not accept international customers. So we've got to narrow it down. Now, some of you guys tuning in are probably going to be aware of a broker that you could use that's not on this sheet. And it's most likely not on this sheet because it doesn't meet one of my 4 just basic minimum criteria for being worthy of considering for active trading. Again, there's a huge difference between someone who takes a couple of trades a day and someone who's taking 50, 75, 100 trades or more every single day. So this is how I'm going to begin grouping it. We're going to start with our first point of comparison, which is number 1, minimum account size. So when it comes to minimum account size, I thought it would make sense to group brokers between small and large accounts. So a small account is a broker where you can fund an account with $500 to $1,000. A large account is $25,000 and up. And unfortunately, a lot of brokers have a minimum account size of $25,000 or higher. And that could make it immediately just not cost effective or even possible for you to set up an account with them. So on this sheet here, on the left, all of these brokers here, Ocean One Securities in the Bahamas, CMEG with offices in a couple different countries, Trade Zero International, also with offices in the US, in the Bahamas, and Canada, or Webull International, which has branches in, of course, the United States, where they're known for commission-free trading, but they also have a branch in Australia, Hong Kong, Japan, Singapore, South Africa, Thailand, and the United Kingdom. In fact, these 4 brokers right here, Ocean One, CMEG, Trade Zero International, and Webull, these 4 accept small accounts. The minimum with Webull is, well, 0. You could fund an account with $1, although you wouldn't be able to grow it very quickly. But with Trade Zero, CMEG, and Ocean One, you could fund an account between $500 and $1,000 and start trading in it, which is really nice. Now, on the right side of this sheet, these brokers all have higher minimum account sizes. They require generally a minimum of $25,000 in order to day trade with a margin account. So perhaps we should quantify, or I should define these 2 different account types. We have cash accounts and we have margin accounts. With a cash account, you don't typically need a minimum deposit of anything more than $1. However, you can only trade until the cash that you've put in the account has run out for the day. So the way it works is, let's say you buy a stock that's $10 a share and you buy 1,000 shares. That's a $10,000 position. You buy it, you sell it. If your account has $12,000 in it, then after you take that one trade, you only have $2,000 left in the account that you can trade with that day. Now, the $10,000 trade, that'll settle overnight. So the next day, you could trade with those funds again, but essentially, you run out of money each day. Each trade sort of eats away at your cash balance, and then you got to wait for the trades to settle overnight. Now, the other type of account is called a margin account. And in a margin account, you can day trade as much as you want. However, there are restrictions on margin accounts. Margin accounts not only let you trade as much as you want, they also offer leverage, which means if you fund an account with $1,000 and you have 4 times leverage, that means you've got $4,000 in buying power. And in fact, over on the left here, Ocean One, CMEG, and Trade Zero International all offer 6 times leverage. So your $1,000 deposit gets you $6,000 in buying power. Now, Webull gives you 4 times leverage, and in fact, Trade Zero Canada gives you 3 times leverage. So if you're Canadian, you can't open with Trade Zero International, you go through Trade Zero Canada and you get 6 times leverage. We'll talk about that when we talk about the popular platforms for Canadians at the end of this episode. But nonetheless, 6 times leverage is fantastic with Ocean One, which does accept Canadians and UK residents, and then CMEG and Trade Zero International. 4 times is standard. And so these brokers here, Lightspeed, Guardian, Centerpoint USA, Cobra, and Interactive Brokers, they all offer the standard of 4 times leverage. Now, back on our sort of 4 critical points of comparison, minimum account size, and leverage kind of go hand in hand, because if you have more leverage, you could get away with a smaller account. So if you had 6 times leverage and you put in $10,000, now you've got $60,000 of buying power. Now, naturally, leverage is a sword that cuts both ways. While with $60,000 of buying power, you could buy 10,000 shares of a $6 stock, and if it goes up 10%, you're up $6,000. Your account is up 60%, even though the underlying asset only went up 10%, because you're leveraged times 6. But if it goes down 10% and you're leveraged times 6, boom, your account's down 60%. So you have to be very cautious when trading with leverage. It's a tool that experienced traders can use, but as a beginner trader, it's better to trade just with the cash that you have in the account. So if you can fund an account with $2,000, $3,000, $4,000, $5,000, that's going to give you a little bit of a bigger cushion where you can take trades, you can still be aggressive, but you're not trading with borrowed money. Okay, so minimum account size, definitely an important consideration. And these 4 on the left are small account brokers, and these on the right are brokers that are more, well, they're going to just require more capital. So now it's kind of for you to decide. If you have the capital, then there are advantages with these brokers. But if you don't have the capital, then it's not really even worth thinking too much about it, because it's not even an option to begin with. So now let's look at our second point of comparison, which is execution speed. So execution speed for me is absolutely critical for my day trading strategy. I'm a day trader that focuses on trading breaking news. I like to trade stocks that are moving very quickly. By the way, those of you guys that want to learn more about my strategy, I will put a link and I'll pin it to the top comments, and I'll put it in the description as well, where you could download my small account worksheet. That worksheet is going to break down for you the basics of my day trading strategy. I'm going to begin by explaining how I manage my risk with a small account, because I always want to position myself to be able to gain more than whatever I stand to lose on a trade. And I focus on achieving as high as possible accuracy. So right now, over the last 30 days, I've been maintaining accuracy of about 73% on my trades, which is really solid. The second thing that I'll share with you are my criteria for stock selection, because in my opinion, choosing the right stocks to trade is one of the first things you can do to reduce your risk. And then the third thing I'll walk you through in this PDF resource is my entry and exit strategy, the entry indicators I look for and the exit indicators I use. So make sure you guys download that PDF if you want to learn more about my trading strategy. Now, with that said, for me, speed is important because I trade breaking news. So I'm going to put this platform up here. This is the Lightspeed Trader platform, which is offered by Lightspeed Trading. So that's this platform right here. The execution speed here on this column or this row, I've got timed out at a 100th of a second. A 100th of a second. Lightspeed order execution is incredibly fast. I'm going to do an order right here for 2,500 shares. I'm going to click the buy button. I'll try to click it loud enough so you can hear. And you're going to see instantly the order is going to show up in my position window for 2,500 shares. Do you see how fast that went in? 2,500 shares, instant. Now, I'm going to have to move my order down to 36, and I'm going to press the sell button. So I tried to tap it, but I missed. All right, let me try again. I'm trying to tap loud so you guys can hear. All right, let's try again. There you go, just like that. Instant. It is so fast. So when I'm using my hotkeys, I'm going to press Shift 1 here, and I'm going to jump in. I'm going to cut it in half, cut it in half. See how fast? That's real money. That's real money. All of those were real money executions. Now, my orders are getting filled in between the spread, which is very common with a thickly traded stock like this. So I'm not making money and I'm also not losing money, which is fine. But I do pay fees and commissions. We'll talk about the fees and commissions, number 3, in just a moment. But in terms of execution speed, there's no question that that was fast. And that's what I need. Because when a stock comes out with breaking news, I want to jump on it quickly. In fact, the reason I'm up $21,622.18 today is because we had some stocks that were moving very quickly. ATCH was one of them. ATCH currently is up 200% on the day with 137 million shares of volume. That's the type of stock I'm going to be interested in day trading. Am I going to hold it for the next 6 weeks, for the next 6 months? No, I'm day trading. So I need software that allows me to move in and out of the market quickly. So now this is Interactive Brokers, just for instance. Interactive Brokers, I'm going to press Shift 1 for 10 shares. So you can see it goes through. Press it a second time. Now 3, 4, 5, 6, 7. So it sort of takes a second for it to populate here. 80 shares. Now I've got 140 shares. Now I'm going to press Control Z and I'm flat. It, to me, is not as fast. Now you might feel like, nah, I don't know, Ross, that seems pretty quick. And that's fine. It's not slow, but it's not as fast as Lightspeed. Now I record those trades, I slow it down and actually time it to see exactly how fast it is. And it's fast, but it's not as fast as Lightspeed. So for me, I look for really fast execution speed, and let's go across the sheet here. So Ocean 1 timed out at 1/100th of a second, instant. I mean, these trades are so fast. I don't have an account with Ocean 1, but I asked one of our students at Warrior Trading to send me a recording so I could time it, and man, it is fast. CMEG, Capital Markets Elite Group, I've traded there, and I time them with my own trades at a little over 100th of a second, between 100th and 2/100th of a second. It's very fast, but it wasn't as fast as Lightspeed or Ocean 1. Now, just as a point of comparison, it's worth noting that all of the brokers that I've listed here for international traders are really fast compared to all of their US counterparts or their US brokers, with the exception of Webull. Webull's the slowest, which is kind of interesting. This is the broker comparison sheet here for all the brokers, including the US brokers. And Webull is the slowest, second, well, tied for the slowest with E-Trade. These two are both coming in with pretty slow executions, around a tenth of a second, just over a tenth of a second, which is not, again, depending on your strategy, that may not be important for you, but for me, it's important, which is why I look more closely at it. Trade Zero, it's pretty fast. Compared to these other brokers, it's pretty fast. Compared to some of the ones on this list here, it's a little bit slower. But I would say for small accounts, for speed, Ocean 1 is going to come in first. For larger accounts, Lightspeed for me is the broker that I like using. But Guardian, I haven't used Guardian with real money, but from everything that I've seen and heard, I have every reason to believe it's just as fast as Lightspeed. Same with Centerpoint, same with Cobra. The only variable here is going to be which route you send your order to the market through. So let me just jump over here and kind of walk you through one of the big differences between the US broker-dealers and then the international broker-dealers. So in the US, we have commission-free trading. And we have commission-free trading because of this relationship called payment for order flow. It's banned in other countries, but in the United States, it's allowed, and it offers commission-free trading. And it has significantly amplified the amount of volume in the US markets because retail traders like myself, like you, we can trade for free if we want to. So free trading means more volume. More volume means more liquidity and more people that are just in general interested in trading. So the way it works, and this is at least in the past, this is you here. And if you want to buy, shares of a stock on the market, this is the stock market over here, you can't go directly to the stock market. The only people who can go to the stock market are brokers. So in the past, you would have to actually pick up the phone and call your broker and say, I want to buy shares. And the broker would go get the order from the market and then get it back to themselves and then back over to you. And the broker would charge a commission right here, and they would pay a fee when they get the shares from the market. And typically they would just sort of bundle that into a larger commission. So what ended up happening in the United States is there's now a third party involved, which is it's a market maker. So I'm just gonna do MM for market maker. And they're an institution. So it's a big financial institution. And what they did is they said, hey, broker, instead of paying the fee to the stock exchange when you send your order there, How about this? You don't pay a fee. We'll pay you money. We'll give you money, and you send all of the orders that you were going to send to the stock market, send it right to us instead, and we'll fill it. So this has almost created an exchange that's off market. This is the main stock exchange, and then this is the off market exchange. Now, the problem with this is there's a little conflict of interest because now the broker's getting paid by this institution. And the theory is that maybe the broker's caring more about how much money they're making than you getting the best price on your orders. So how would your order have filled if it had gone to the regular market versus gone through this institution? So because of this potential conflict of interest, market makers and the brokers are required to file regulatory reports that actually display the price improvement that you as a customer would have received and the order execution time. And so that's where we get all this data from. Now, in the case of international traders, you can't participate in any broker that offers payment for order flow because it's not allowed in your country. So it's allowed in the US, but it's not allowed in your country. So all of these brokers here are going to charge you a commission, which means you're basically, your order's going to the market the old-fashioned way. But that means, right, it's not free anymore. You've got to pay the fee. So there's two fees. The first one is the commission, and the second one is called the routing fee. So the routing fee is based on how your order is sent to the market. Now, what's interesting here is that some brokers give you a lot of options of how you route your order to the market. So let me just pull up Lightspeed again here, and I'll just show you what that looks like. So here, if I click on this, you can see all these different options I have for how I'm going to send my order to the market. And I know that some of them are faster than others. I know for a fact that this one, LSPT, I don't like using it because sometimes it lags. Sometimes I place my order, and sometimes it's instant, but other times the order just sits there. We'll just, for the sake of trying, we'll just see how it does today. It'll probably be fine. But every now and then, so it's pretty much instant. But every now and then I've found that order lags a little bit, and that for me is not tolerable. I can't handle that. So I just choose not to use that one entirely, and I use NASDAQ. So I route my order through the NASDAQ route. But every time I do that, I pay a routing fee. And the routing fee isn't just a dollar amount based on you took one trade. It's based on how many shares you trade. So it's 0.003. So that means times 1,000 shares equals $3. 10,000 shares, 10K equals $30. 100K shares equals $300. So if you bought 100,000 shares of penny stock through NASDAQ, it would cost you $300. Wow, that is a lot of money. So now you could see why international traders may not be as inclined to trade penny stocks because they're going to be very expensive. Well, don't worry, my focus is not trading penny stocks either. So you're going to pay this fee, but that's just the fee to basically to the exchange. Now your broker still wants to charge a fee. And so in the case of Lightspeed, well, let's go to the left. Let's start. So now, well, let's see. So let's jump back onto the whiteboard. So now we've kind of transitioned from execution speed to fees and commissions. And I guess the last thing I'll say on the execution speed is that the method of routing determines how fast your order executes. So this method of routing is faster. So even though I'm in the United States, even though I could use a commission-free broker, I don't. I use Lightspeed Trading because the execution speed is so fast. Now I could use, and I pay a commission for it. Now I could use, we'll pull up Thinkorswim. Charles Schwab, Thinkorswim. A lot of people like them. The execution speed is substantially slower. It's slower than with Lightspeed. So yes, commissions are free. And if I don't mind the order being a little slower, then okay, but it is slower. All right, so let's start with Ocean One, and let's start establishing what our fees and commissions will be. Okay, so now for the most part, these brokers, in terms of, just to wrap up on speed, for the most part, they're all very fast. Now, as long as you're using the right route, they're going to be very fast. If you choose Guardian and you choose to use a route that's slow, it's going to be slow. But if you use NASDAQ with all four of these, they're going to be equally fast. And NASDAQ with Interactive Brokers is quite fast, but for some reason, Interactive Brokers, their platform just is not quite as quick. I'm not sure why. All right, so now on the commission. So on Ocean One, this is our small account broker, they charge a commission of 0.0007. So that is the commission to the broker right here, 0.0007. So that means 1,000 shares, 1K equals 70 cents. 10,000 shares equals $7. 100,000 shares equals $70. So honestly, that's not too bad, right? You're still going to pay this though. You pay both, right? It's 1 plus 2. So let's go back over here. So what's your total cost going to be with Ocean One? The lowest cost, and it's going to depend on which route you're using. The lowest cost would be $2.20 for 1,000 shares. $22 for 10,000 and $220 for 100,000 shares. So that's Ocean One. All right, so that's our benchmark there. CMEG, just slightly less expensive, a little bit cheaper, but only by a little bit. So $2, $20, or $200. Trade Zero International, they have an interesting commission structure. So over here on the whiteboard, you pay 0.003 when you send your order to the market and when you execute a marketable order. A marketable order is any order that fills instantly. So the second you send it, it fills. So all of the orders that you've already seen me trade today, those are all marketable orders. You're buying at the ask, you're selling at the bid, it's a marketable order. You pay a fee. But if you send a non-marketable order, the exchange will actually pay you a rebate. It's a reward for adding liquidity to the market. So the exchanges want people posting their orders on the bid and the offer, because then when someone like me comes along and wants to buy, those orders are present. So they reward people for adding orders, and then you pay if you're taking away that liquidity. It's called adding or removing from the market. So with Trade Zero, as long as you're doing orders that are not marketable, it's commission-free trading. Now, for what it's worth, if you do non-marketable orders with Lightspeed, it's not just free, you actually collect the rebate. So the rebate comes back to you. You actually get to make a little bit of money. It's not a lot, but it's a little. It's 0.002. So it's $20 for 10,000 shares that you make back. But with Trade Zero, you don't make it back, you just have free trading. So they advertise that they're sort of like a free commission broker, which is true, but asterisk only on limit orders, non-marketable limit orders. And so for me, only about 25% of my orders are non-marketable limit orders. So that means the remaining 75% are going to be marketable. So 1,000 shares times 0.05 is, 1,000 shares times 0.005, because it's half a penny, that's $5 per trade. So even if I only paid that on 75% of my orders, we're still at $3.75 for 1,000 shares. That's going to be $37.50 on 10,000 shares, $37.50, and $375 on 100,000 shares. That's too expensive, right? So unfortunately, from a pricing perspective, Trade Zero, it's probably not going to make sense. Now, there's a couple other things that people like about Trade Zero, which might make you willing to pay this price. Of course, you get 6 times leverage, and you get really great availability of shares to borrow. So there's people that like that. But for my purposes, Trade Zero is going to go over here. It's kind of off the list. Webull. Well, we already know Webull's a little bit slower. That's a problem. And what's also a problem is that their commissions, they vary depending on the branch. As we know, they have branches in a number of different countries, but they tend to be based on a percentage of the transaction. So let's see. So this one is the UK. So pricing in the UK is based on a percentage. And this is going to be too expensive. You're going to spend hundreds of dollars on big transactions. This is in Australia. The minimum is $5. So you're going to spend a lot of money there, and it goes higher. And then Japan, well, you don't have to read Japanese to know that that says percent. So you're going to be spending a lot of money with Webull International. So unfortunately, Webull is also going off the list. And now we're beginning to kind of get things narrowed down, right? Account size, important, execution speed. We probably already could have taken Webull off the list here on this one, but now we're getting to commissions and fees, and this is where we're really starting to see a couple platforms drop. So now these are our 2 brokers remaining for commission for lower commissions, fast execution, and small accounts with 6 times leverage. Now let's talk about traders with bigger accounts. So these are all pretty similar when it comes to their commissions. it's kind of interesting because Lightspeed is a little more expensive with smaller share size, but then they're less expensive when you trade with bigger share size. And that's because Lightspeed is the only broker on this list that charges their commission not based on how many shares you take, but a fixed amount as $2 per ticket. So it's $2 per ticket. So if you trade 100,000 shares, it's only $2. Whereas that same 100,000 share order over at the other broker, you were spending $50 to $100 or more just in the commission. So this is only $2. So Lightspeed is going to be a much better rate, and then this one is the same. So Lightspeed is better for traders who trade and may want to trade bigger share size because you're not going to get dinged on that extra share size. Guardian, Centerpoint, and Cobra Trading, these are brokers that really cater to short sellers. And short sellers, they make you pay the per share rate. So for me, I'm going to take these three away and I'm going to put them over here because in my opinion, I just don't need I don't need the availability of shares to borrow. So for me, that's not something that I care for. I don't need it. On all other grounds, the platforms are basically equal. Execution speed, they're fast. The platforms have great level 2, hotkeys, everything else. But this one is cheaper. All right, so now we're going to start getting this narrowed down. So now we've taken out 3 more. So I'm going to delete these columns. So now what do we have left? Interactive brokers. Interactive brokers pricing is not bad. They're kind of the same as these others. So that's not going to be the deal breaker. The pricing is the same. The execution speed being a little slower, that's a problem. The trader workstation platform. So now let's start talking about platform number 4, platform UX. So back onto the whiteboard, number 4. So now this is where we're going to have another, we're going to lose another one on this item. All right, so interactive brokers, their trader workstation software, which is what you can see right here. This software is, it's kind of antiquated compared to other platforms today at this point. It's just, to me, not fast enough, and it's just not worth it. So if you want to, it's not fast enough. That's the first, execution speed. Secondly, and this is, I'll just put it here. Execution speed. But secondly, you don't have the ability to sell based on a percentage of your position, and you cannot see halt levels. And this is really a problem. Now, if you want to see dedicated platform demos to the software that you use with Ocean One and CMEG, it's called DAS Trader. I'll just write it here for you. I have a separate video that I'll link at the end of this episode. There's a DAS Trader demo that shows you how to use the actual software that you would use with these 3 brokers. You can use that DAS Trader software with Ocean One, CMEG, and interactive brokers. The only problem with interactive brokers is it's going to cost you an extra $175 a month. But that, to me, is the only way to make interactive brokers work. So now I'm going to put interactive brokers over here. It makes interactive brokers a little more expensive because you've got to pay for the DAS software, but it's worth it. All right, because now this checks all the boxes here with level 2, hotkeys, hotkey offsets, ability to sell based on percentage of position, and the halt resumptions. So for those that aren't familiar with a couple of those things I was just talking about, ATCH right now, this is the level 2, so we can see our level 2. LULD 848 is the price where the stock will halt going up. So if it goes to 848 basically instantaneously, like right now, the stock will halt going up. Now I need halt levels because when stocks are moving quickly, we often see these circuit breaker halts. And I want to know what those halt prices are, because while a stock is halted, trading is paused for a minimum of 5 minutes. You can't buy and you can't sell. So if you're about to be in a stock that's halted, you want to know that. And so you need to be able to see where the halt levels are. So Lightspeed Trader displays halt levels. DAS Trader, which is the software that I was just talking about, this displays the halt levels right here. It shows 560 by 840. So it's kind of smaller, but it is right there. So you can see the halt levels right there. Now, the hotkeys, if you go into the setup here, you can go to hotkey. And I'm just going to move this up to this monitor so you can see it better. So these hotkeys allow you to create a script that executes an order. So this is a buy order for 10 shares to buy the ask with that account number. That is the route using just a limit order, the time in force, and it loads and sends. And now I script that to a hotkey, and just by pressing Shift 1, I will instantly execute an order. So I go F, I press Shift 1. Oh, I didn't select the account. But anyway, I would do that and instantly the order goes through. So that type of hotkey is really important. And what you can do is you can create these hotkeys where you're actually selling by a percentage of a position of your position. So this is sell half. So I'm now selling half of my position. So even if I have a really unusual position, as I did over here on Ford, right? So I did this and then let's see, now it's 375 selling by quarters. It's doing the math for me, right? So it just figures it out, how many shares I have left. I don't have to type in anything. I just press the buttons and I can move in and out. So that for me is really important. Okay, so now you can basically you can either use Dash Trader with Ocean One, CMEG, or Interactive Brokers, or if you're using Lights, and you can also use it with Lightspeed Trader. So you can use that same software, Dash Trader right here, with all 4 platforms, which is awesome. Lightspeed Trader also includes, or Lightspeed Trading also includes the Lightspeed Trader platform right here, which has some extra proprietary software or features that I really like, including a super smart order, which fans your order out to multiple routes at the same time. So you could send one order to 5 of these markets at the same time and see which one can fill you shares first, and then they cancel what doesn't fill. So it's like a way of getting in and out really quickly. But nonetheless, you could basically use the same software with these 4. So now we're kind of tied, it seems. Ocean One, CMEG, Lightspeed Trader, Interactive Brokers, right? Well, not quite. Let's go to the top. So this is how I rank, and these are the raw scores that I'm going to give these 4 platforms. Lightspeed Trader is a 9. This is a platform and a broker that I really like. They're in the US. I feel very confident having $500,000, $1 million, cash account or margin account with them. No issue with it being a big account because it's a US broker dealer, has the US insurance. Interactive Brokers, also a big account, have no concern about, or a big broker, have no concern having a lot of money there, but they have something called Rule 144, Rule 144. And if we look at this here, Rule 144 is a rule for affiliates of a company. So an affiliate of a company means you're in a relationship with someone who's in control at a publicly traded company. And if you have that relationship and therefore maybe have inside information, or you just have some relationship with this company, you're restricted on how many shares you can sell during a period of time. And that is either 1% of the total number of shares that are outstanding for the company, or more than 1% of the average weekly volume over the last 4 weeks. If you trigger either of those thresholds, Interactive Brokers will prevent you from selling. They will say you're blocked from selling because of Rule 144. You need to confirm with our compliance department that you are not an affiliate of the company. Now, to me, that's a problem because what they've essentially done is they've erred on the side of caution by assuming everyone is an affiliate of the company. And you now have to affirmatively confirm that you're not an affiliate, but that can take hours. So now you're sitting here for hours in a position that you're maybe only planning on holding for 15 minutes. Let's look at a stock like ATCH today. Look at how volatile this is. Just in the last 3 hours, it's gone from a high of 11 down to $6. So if you were in this down here at, let's say 867 for the dip off VWAP, and you were ready to sell here, and then it blocked you from selling, and now you're still holding because you can't get through to compliance, you'd be about to blow a gasket. Now let's look at the average volume of this stock just 2 days ago, 480,000 shares. What's the volume today? 140 million. So if the average daily volume is, let's just say 500,000 shares, 10% of that would be a 50,000 share position. 1% of that would be only 5,000 shares. 5,000 shares, that's nothing. I mean, this has 140 million shares of volume. There'd be no problem buying and selling 5,000 shares with any other broker, but you try to take big positions on a stock like that that has low average daily volume, the average weekly volume, and all of a sudden your order gets flagged. So for small cap traders right now in today's market, unfortunately, I would not be able to use Interactive Brokers as my primary account. So that's just the reality. And I wish that that wasn't the case, but it is the case. As soon as they decide, not to draw the conclusion that every customer is an affiliate until they declare they're not, then I would, reevaluate. They would be an 8. they would be my second choice behind Lightspeed. Lightspeed is still a little faster with order execution, and their platform is better and a little cheaper. But unfortunately, Interactive Brokers, as it stands right now, is not a broker I would use. Again, this is for my strategy. If you're a large cap trader, if you trade futures, if you trade Forex, this may not be relevant for you at all. 144 doesn't matter. So it's only if you're a small cap trader that this is going to be a problem. So it seems to me that Interactive Brokers doesn't really want small cap traders trading with them, because otherwise they wouldn't have this rule, or they would have considered changing it a long time ago. So now we're down to 3 brokers. Lightspeed Trading right here, which I give a 9. They're a great broker. They accept international accounts, but not Canadians. I don't know why. They don't like the way you talk. I don't know. They haven't told me exactly what it is, but they don't accept Canadians. So that's a tough break. So it's no good for Canadians, but they do accept international customers from other countries. And then we've got CMEG. CMEG, they also don't like Canadians. They used to like them, and then they said, no, we don't want Canadians anymore. So now Canadians are also banned at CMEG. That is a drag. But they're good for international traders, although at this point, more traders are going to Ocean One. So if we're going to rank these in order, we would rank them like this: Lightspeed Trader, Ocean One, CMEG, and that is the ranking right there. Those are the top 3 brokers. So if I was international and I had more than $25,000, I'd be using Lightspeed. If I was international and a smaller account, I would be using Ocean One, and then CMEG at this point would be my backup. Now, let's talk about popular for UK. Guess what? UK comes in basically the same. Lightspeed Trader number 1, Ocean number 2, CMEG number 3. Let's talk about best for Canadians. Ocean One, Trade Zero, Webull Canada. Webull Canada is actually $2.99 per trade. So they actually have a cheaper commission structure for Canadians than they have in the UK or in Australia or in Japan. So Webull Canada is actually pretty good. They're still a little slow, but they're really cheap because only $2.99 per trade. You don't have any routing fees. You don't have them. They're gone. No routing fees, just $2.99. So Webull Canada is pretty good. Centerpoint Canada, also pretty good. They are a great broker for short sellers. And then Interactive Brokers, well, we've got our same issue here. So this is the list for Canadians. Ocean One is the winner. For the UK, you've got Lightspeed number 1, Ocean One number 2. And for international traders, Lightspeed, Ocean, and then CMEG. All right, so that is the ranking. I want to thank you guys for tuning into this episode. I'm going to put a link for the Dash Trader platform demo so you could check that out, since that's the platform you could use with any of these 4 brokers. And as always, if you enjoyed this episode, I hope you hit that thumbs up and you subscribe to the channel for more episodes about trading strategy just like this. And don't forget to download my small account worksheet PDF pinned to the top of the comments and linked in the description. Thanks as always for tuning in. I'll see you for the next upload real soon.